Hey warriors, hope you're all doing good. Let's start the final lecture of CA Inter amendments for May 24 and November 2024. Your default tax regime, right? Now, I know there's a huge buzz about it, and Rahul, this is a new section. Do we have to spend so much time? Answer is technically no. You will know by the time we complete this lecture. But before I start itself, let me give you a thought. One of the most important lecture for you for your current attempt, literally the most important lecture, not because obviously the section has changed and so many amendments have come in, but also because of your new syllabus coming into picture. Let me give you a background. Until November 2023, your syllabus was pretty straightforward. They used to come and say that, you know what, we'll ask you a question, you have to answer the question based on what we say. That's it. May 2024 now moves from that provisional scheme to analytical knowledge. What do you mean by analytical knowledge, Rahul? Now we use the word called as tax optimization when we look at this chapter, right? And that's what has become more critical for your May 24 and November 24. In the new syllabus coming into picture, ICA now expects you to know what is the right decision to make. It expects you to think like a CA right away, right? And which is why this regime becomes extremely important, because obviously for those who have done this November 2023 and earlier would realize the fact that when you have two regimes, you have to make a choice as to which one is better, right? Now, until your November attempts may not have tested so much, they will give you one of the regimes and play around with it. But May 2024 questions are also devised in such a way that they want you to solve for both the regimes, and therefore this becomes extremely critical. Obviously the syllabus has also changed, so you have to be very careful about it, right? Let's take a dive into the sections and see what is the significant changes which you need to keep in mind before you proceed for your May 24 and November 24 exams. Now, there are two ways to approach this lecture. One is that I can come and bore you with what and all was the amendments earlier and then come and tell you what is to be read now. Or I can come and say, you know what, forget what you have done earlier, let's do this fresh. I would prefer the second approach. Rather than confusing you with what was earlier and then coming to what is right now, it is better to discuss as if this is new. Okay, so we'll talk about this chapter itself as if this whole chapter itself is new for you, and that is how we'll approach this chapter, right? Let's keep that thought in mind. If you still have some concerns, we can discuss about it later, but right now this is what the approach is, what I would feel. Yes, before I start this chapter itself, let me give you a background. The background is like this. Until 2022, when this you had two regimes being introduced, the buzz about it, the old tax regime and the new tax regime, the fancy was like this. Under old tax regime, you had this policy that you could go with the normal chapter which you're doing till now. So all the chapters accumulatively, that was your old tax regime. In 2022, Government of India introduced something called as new tax regime, which was nothing but 115 BAC. Where they came and said, you know what, we are lowering the taxes rates for you. We're lowering the tax rate for you. Now, a normal human being would come and say, Rahul, yeah, lowering tax rate would automatically mean lowering taxes, therefore it is better. Answer is no. They played it smart, where they came and said, you know what, we'll lower the tax rate for you, but we'll increase the income base for you. We'll increase the income base for you. What do you mean by income base, Rahul? They came and said that the deductions and all which you were claiming earlier, no, take it away. Take it away. Automatically income will increase. Now, when your income is increasing, even though the tax rate is lower, your tax may still be higher. Your tax may still be higher. So till 2021, 2022 and all, you had to make that smart decision. And most of the people made the smart decision to be in old regime. To be in old regime. The reason was very simple. The rates were not very fancy. The reductions were so many taken away. Right? So eventually it so happened that most of the people who wanted to opt for new tax regime could not do so because the tax was very high in that. Keeping that in mind is when we went to Nirmala ma'am and came and said, ma'am, the regime is not helping in any way, because at the end of the day, the tax rate is also not very fancy and the deductions taken away itself is so much that no one wants to opt for new tax regime. Might as well scrap it away. Might as well scrap it away. Which is when Nirmala ma'am came and said, no, we put some efforts into this regime. Let's make it more serious. Let's make it more serious. Hereby came Finance Act 2023. Two things happened in this Finance Act 2023. Thing number one, they made it very fancy in the sense that the lower tax rate became even lower. The lower tax rate became even lower. The rates were further reduced down, right? Second, they allowed for some common exemptions which people were claiming. They allowed for some common exemptions. Now, some is only one, but yeah, I will use the word some. They allowed for some common exemptions which people were claiming, and that is what is more critical for your exam right now, right? Before we go forward, let's understand what do you mean by the term default tax regime. See, when you went to Nirmala ma'am and came and said that, ma'am, I want this regime itself to be scrapped away, she got furious. She came and said, who are you to come and tell me that I want the regime to be scrapped away? Let me make it mandatory itself for you. Let me make it mandatory itself for you, which means what happened is now Nirmala ma'am came and said that 115 BAC is what your default regime is. Meaning, if a person stays silent and does nothing in life, the assumption would be that he is not under Finance Act. The assumption would be he is under 115 BAC. So what you used to call as new tax regime earlier, now you are going to call it as default tax regime. Rahul, what happened to the old tax regime? Now that is called as alternate regime. That is called as alternate regime. Now Rahul, what do you mean by this? Point is very simple. Today, if at all a question comes and they say you're opting for default tax regime, that means you're under 115 BSc. You're under 115 BAC. If they come and say, no, you're planning to opt out of default regime or shift out of default regime, that's when you're going to your finance acts. That's when you are going to finance act. Just keep that in mind. Yes, that is the first critical thing which you need to understand, because if you choose a wrong regime in the exam, the automatically answer is wrong. The automatically answer is wrong. So first thing is to understand which regime are you talking about. Please understand that going forward, if you see the word default tax regime, it means you're under 115 BAC. If you see the word shifting out of default regime, it means you are under normal regime. Now, please be very careful about this, because in exam, what they'll do is they'll say shifting out of default regime under 115 BAC. Now, that does not mean that you are under 115 BAC. You are shifting out of 115 BAC, meaning you are under normal income. You are under normal income. So, please be very, very smart about what is the question asking you for. A wrong regime means a wrong answer automatically. Yes. Repeating it once again for the benefit of everyone. If the word says he's opting for default regime, it means you're under 115 BAC. If they say you're shifting out of default regime under 115 BAC, it means you're under Finance Act. It means you're under Finance Act. Just keep that in mind first. Rahul, let's proceed accordingly. Let's proceed accordingly. You have already done what your Finance Act looks like. Now we are going to discuss what happens in a default regime. Yes, income tax came and said, Rahul, starting current year, your default regime under section 115 BAC will now cover every person who was under slabs. Will cover every person who was under slabs, meaning now this regime is applicable for all individuals, HUF, AOP, BOI, AJP, everyone. It is applicable for everyone, whether you are a resident or a non-resident, doesn't matter. So it is covering every person right now. Second, when we go to rates of taxes, the first thing which we discuss is tax rates. Now, Finance Act rates, you know, 0 to 2.5 lakh, 0, 2.5 to 5, it is 5, 5 to 10, it is 20, and etc. etc. The new rates are as follows. Focus on the rates very carefully. The new rates are as follows. They are coming and saying, Rahul, the new rates are every incremental 3 lakh, incremental 5%. Every incremental 3 lakh, incremental 5%, which means for the first 3 lakh rupees, it will be 0. 3 lakh to 6 lakh, it will be 5%. 6 lakh to 9 lakh, it will be 10%. 9 lakh to 12 lakh, it will be 15%. 12 lakh to 15 lakh, it will be 20%. After 15 lakh, everything will become 30%. Everything will become 30%. One thing to keep in mind is that you have made an incremental 3 lakhs, incremental 5%, but somewhere if you notice 25% is missing. Somewhere if you notice a 25% is missing, that is a conscious miss. That is a conscious miss. Rahul has not made any mistakes. Yes, this 25% is not there. Is not there. It is purposely not there, which means it is 0 to 3 lakhs 0, 3 to 6 5, 6 to 9 10, 9 to 12 15, 12 to 15 is 20. After 15 everything is 30. After 15 everything is 30. The old 15 remains as new 15 also. The old 15 remains as new 15 also. The incrementals have changed, the rates have changed. The incrementals have changed and the rates have changed. So please keep this in mind. Current revised default tax regime rates are 0 to 3, incremental 3s. Incremental 3s. Yes, which means obviously what has happened, the rates have come down. The rates have come down. It is giving you more benefits. It is giving you more benefits. So first thing is on the rates of taxes. First thing is on the rates of taxes. With me till here? Yes, yes. Keep that in mind. First thing. Second, Rahul, if you are going for a rates of taxes, earlier also you had this thing called rebate and surcharge. Now also you have this thing called rebate and surcharge, which means income tax is coming and saying that, Rahul, if you have a rebate, you are eligible for rebate. Now the thing is, current year they have come and said, Rahul, rebate under default regime is 7 lakh rupees. The rebate under default regime is for income of 7 lakh rupees. Yes, which means under the alternate regime, you will get a rebate if your income is up to 5 lakhs. But in default regime, you will get a rebate if your income is up to 7 lakhs, which means up to 7 lakhs, you will not pay any tax if you are having slab rate income alone. If you're having slab rate income alone under default regime, So what does the provision come and say? The provision comes and says that if you have an income up to 7 lakh rupees in default regime, you will not be liable to pay tax, because your rebate will be the actual tax payable or 25,000, whichever is lower. Yes, comparing it with the alternate regime comes and says if your income is up to 5 lakhs, 12,500. Here, if the income is up to 7 lakhs, 25,000. This is what the rebate criteria is. This is what the rebate criteria is. Please keep that in mind. Yes. So second amendment for the current year, the default tax regime comes and says you will get a rebate up to 25,000 if the income is up to 7 lakh rupees. If the income is up to 7 lakh rupees, it doesn't change the fact that you cannot claim rebate on 112A. That remains the same. That remains the same. No change in this. No change in this. Yes or no? Yes. Please keep this in mind. Please keep this in mind. This is your first amendment. This is your first second amendment, obviously. Rates of taxes are the kapro rebate. Yes. Third, we are now introducing a very fancy thing called as marginal rebate. We are now introducing a very fancy thing called as marginal rebate. Rahul, what is marginal rebate? For those of my students who have learned from me in the past, I always used to ask you one simple question. Imagine a scenario where your total income is 7 lakh rupees. Your total income is 7 lakh rupees. Would you pay tax on this? No, because you'll get a full rebate. You'll get a full rebate. But imagine if your income is 7 lakh 010. Your income is 7 lakh 010. Will you now get rebate? Answer is no. Rahul, will you have to pay tax? Answer is yes. Rahul, how much you will pay tax? You will pay tax on everything. You'll pay tax on everything. Starting from the first 3 lakhs, you'll have to pay tax on everything. You'll have to pay tax on everything. And therefore, we always used to complain about this. We used to come and say, Rahul, it's the same scenario. If it was in surcharge, you used to get marginal relief. Yes or no? Yes. You used to get something called as marginal relief, but nothing was happening when it comes to rebate. Nothing was happening when it comes to rebate. People were paying left, right, center. Just because you had an extra 10 rupees, you were ending up paying 25,000 plus the 30% on the 10 also. 30%, 20%, whatever the number is. Yes, you're paying so much. People were not happy with this itself. And therefore, everyone was complaining that, sir, when you're giving this benefit for surcharge people, rich people, why are you not giving it for poor people? Why are you not giving it for poor people? Old regime, they came and said, no, we cannot do. New regime also, they said, we cannot do. Current year, to make it more fancy, we introduced this new concept called as marginal rebate. Where first time Nirmala Sitharaman ma'am recognized the mistake which was happening. Meaning, now Nirmala ma'am came and said, if your income was 7 lakh rupees, you would have paid no tax. You would have paid no tax because your rebate would have come as full. If your income is 7 lakh 10 rupees, it looks very stupid that I will ask you to pay tax of 25,000 fully. For just earning that extra 10 rupees, I am asking you to pay extra 25,000. No. Here again came the same concept of marginal relief in the form of marginal rebate, where Nirmala ma'am came and said, do one thing, if you have incremental only 10 rupees, you pay me only 10 rupees as tax. I don't want anything extra. And that's the concept of marginal rebate. The steps remain the same as marginal relief. So we will follow the same steps. For example, let's say that my income is 7 lakh 10,000. How much is my income? 7 lakh 10,000. Now, ideally speaking, in a normal scenario, you would have come and told Rahul, it's gone beyond 7 lakh rupees. Therefore, you will have to pay tax on everything. I do agree. What I will do is, let me compute tax. For the first 3 lakh rupees, I would have come and said, 0. For the next 3 lakh rupees, it is at the rate of 5%. Take out a calculator, do it quickly for me. It is 15,000 rupees. Yes, sir. Yes. So 6 lakhs is over. Left off is balance 1 lakh 10,000. Will be taxable at the rate of 10%. Number is 11,000 rupees. Which means total tax is 26,000. Now, I know we have to put cess and everything, but hold back. Total tax is coming as 26,000 rupees. Now, you will obviously go and approach Nirmala ma'am and come and say, Nirmala ma'am, if my income was 7 lakh rupees, I would have paid zero tax. Because you would have given me full rebate. I just earned an extra 10,000 rupees. Because I earned an extra 10,000 rupees, you are requesting me to pay 26,000 rupees. Tell me, how is this fair? I don't want to pay 26,000. In which case, Nirmala ma'am came and said, no worries, my child. You pay me the 10,000 rupees, I'll give you rebate for balance. Which means in simple words, I will get a rebate for 16,000 here. I'll get a rebate for 16,000, which is nothing but marginal rebate. marginal rebate. So I'll get a 16,000 worth of marginal rebate, ending up with a tax of 10,000. Obviously, on this you'll have to pay cess at the rate of 4%, giving you a number of 400. Therefore, you'll end up paying a tax of 10,400. You will end up paying a tax of 10,400. This is your concept of marginal rebate. Same as marginal relief, just that it is for poor persons now. Just that it is for poor persons now. I hope this makes sense. Yes, yes. We've been looking forward to this for a very long time. Now, one thing which I want you people to understand very clearly is this is only for default regime. This is only for default regime. This is only for default regime. Meaning what, Rahul? If you are going under alternate regime, the Finance Act rates, where your income goes as 5,10,000 rupees. If your income goes as 5,10,000 rupees, they will ask you to pay tax on everything. They have introduced this marginal rebate only for default regime, not for alternate regime. Watch out for the questions which come in exam. Very clearly watch out for the questions which come in exam. If an exam question comes where they come and say you're under alternate regime, you will do the same approach which you did earlier, which means 5 lakhs no tax or 12,500 deduction. If it is anything above 5 lakhs, you will not be eligible for any rebate. But if you are getting a question in exam where you're getting a default regime question, 7 lakh rupees no tax. 7,25,000 variko also no tax. 7,25,000 also no tax, because that is what I'll come and say. No, if you are getting 7,25,000 worth, then I'll come and say yes, you will claim marginal rebate. Incremental till 25,000. After 7,25,000 is when rebate will stop. You will start paying taxes as per normal rates. Be extremely careful about this. Yes or no? Yes, it is only for section 115 BSc. Please mark this as important, because MCQ question, this is what will play the game. Yes or no? Yes. Let's read back. It says rebate under section 87A will be resident individual, total income up to 7 lakh rupees will get a rebate of 25,000 or actual tax, whichever is lower. You will also get something called as marginal rebate, where they're coming and saying take the total tax payable which you will have and then compare it with the extra income which you are going to pay. If you have any extra income which is less than the total tax, then you pay the income fully to government. Balance will become a marginal rebate for you. Yes, example is there in the question. We already did the same example, just said we did for 7,10,000. Fact remains the same. Just follow it off. If you know marginal relief properly, this will come automatically. The most important thing which you need to keep in mind is the concept of marginal rebate is not available if the assessee opts for tax as per normal provisions, which means if you are under alternate regime, you will not get this marginal rebate. You have to pay tax as it is. Yes or no? Yes. Proceeding forward. You are moving to next thing called as surcharge. Now, there was technically no change in surcharge last time also. Current time also they are keeping the same thing. With a small difference. If you remember your alternate regime comes and says you will not levy any surcharge up to 50 lakhs. From 50 lakhs to 1 crore you levy surcharge of 10%. 1 crore to 2 crores you levy surcharge of 15%. 2 crores to 5 crores you levy 25%, and after 5 crores you levy 37%. Yes or no? Yes. Income tax now comes and says that if you are under default regime, or section 115 BSc, 37 has been scrapped. Meaning if you are a rich person who's having an income more than 2 crores, then only 25 will apply to you. Nothing beyond 25 will apply. They have no introduction of 37%. Under an alternate regime, you will have to pay surcharge of 37 also if the income is beyond 5 crores. But if it is a default regime, 2 crores come 25%, and that's it. You will not have any 37%. Please keep this in mind. No enhanced surcharge of 37% is applicable. Please keep this in mind. This is the next amendment, which means default regime has become extremely popular for any rich person. Any person having income more than 5 crores will definitely come and say, let's do default regime, because I don't have to pay extra incremental 12% surcharge, which is a big number, obviously. right? So these are your critical amendments for the current year. One, the rate has fallen, incremental 3 lakhs, incremental 5%. Second, rebate now is eligible up to 7 lakh rupees, 25,000 rupees. Third, if you have a rebate, you also have now marginal rebate when it comes to default regime. Fourth, your surcharge does not now have 37% rate. Your surcharge does not now have 37% rate. Now this is pretty much from your rates of taxes. This is pretty much from your rates of taxes. I hope everyone is clear till now. Yes, yes, let's proceed forward. Let's proceed forward. We are now going to the income base. We're now going to the income base. Rahul, what is the change in the income base? The change in the income base is actually nothing. Except for one critical change. And definitely expect a questions around this. The critical change is under salaries. If you recall, when it comes to salaries, we had three deductions. One was standard deduction of 50,000, professional tax, and then entertainment allowance. Starting current year, income tax came and said standard deduction is something which everyone was asking for too much. Let me grant it. Meaning starting current year under default regime or 115 BAC, also you will get 50,000 standard deduction. Under default or section 115 BAC, you will now get a standard deduction of 50,000. The biggest critical amendment in this regime. This exam, if you get any salary related question, please ensure to deduct 50,000 rupees, whether you go for default regime or you go for alternate regime. It does not matter. Amendment number one. Amendment number two. They are coming and saying that if you were under IFOS, you earlier had something called as family pension. 1/3 or 15,000, whichever is lower, right? That was something which was there. Current year amendment, they came and clarified, Rahul, family pension also you can claim now. Family pension also now. Last time variko they could not claim standard deduction and family pension. Current year you can also now claim standard deduction and family pension also. Yes, two critical income based change. Please keep those two in mind. Other thavara, I think everything is fairly same. Yes, one more last thing which they have come and done is in chapter 6A, since employer contribution to NPS was there, they now came and said central government contribution to Agniveer scheme is also there. Now here is where I want you to be critically careful. When it comes to this NPS and Agniveer scheme, only the employer contribution or the central government contribution has been deducted. The self contributions are still not allowed. Yes, so these are the three critical changes when it comes to your 115 BAC. Please keep these three critical changes in mind because it's extremely important. Yes or no? Please be very, very careful about this, right? Recapping the whole section once again. Section 1 was about rates of taxes, where we came and said for every incremental 3 lakhs, you'll get an incremental tax of 5%. We spoke about rebate, where we came and said rebate is now eligible for 7 lakhs and 25,000. You will also now get something called as marginal rebate under default regime. When it comes to surcharge, I came and clarified to you that you now don't have surcharge of 37%, and income based changes are that now you can claim standard deduction of 50,000 under salaries, and you can also claim family pension under IFOS. Separately, if you are going for chapter 6A, you now have an additional increase of central government contribution to Agniveer scheme. These are the three critical income based changes which are now eligible. Apart from that, whatever you learnt in the previous lectures are remaining same as it is. So what you learned earlier, that same provisions apply as it is. Yes, please keep that in mind very carefully. Yes or no? Let's proceed. Yes, apart from this, you have technically nothing else to worry. More of an administrative thing which I wanted to clarify to you is that, like I told you, starting this year, this section has now become your default regime. Which means income tax now comes and clarifies that if this section is your default regime, it means if you stay silent, this is what will follow. Meaning if you're a salaried guy, you have to choose to come out of this default regime. Therefore, be very careful in exam if they use the word shifting out of default regime under section 115 BAC subsection 1A. If they use the words shifting out of default tax regime under section 115 BAC subsection 1A, it means you're going to alternate regime. Similar thing has come in PGBP also, where they came and said, Rahul, standardly you will be a part of default regime. You will be a part of default regime. If you choose to not be a part of default regime, you can file a form and come to alternate regime. But since this is PGBP wala case, you can only do once. You can only do once, which means if you come out of this and you become a part of alternate regime, you can once again come back to default regime, but after that you will never be able to come to the alternate regime. You'll never be able to come to the alternate regime. In simple words, Rahul, let's say for example, current year I am going to start. Current year I have decided that I am in default regime because that is what the standard is. That is what the standard is. Next year I decided I want to go to normal Finance Act regime. I can file a form and go back. I can file a form, go back. Once I do that, I'm always in Finance Act regime. I'm always in Finance Act regime. 3 years down the line, I decided, no, I think something is wrong. Let's come back to default. Let's come back to default. You can come back to default, but once you do that, you will never be able to go back to alternate once again, unless and until your business stops. Unless and until your business stops, which means with the default becoming, with 115 BSc becoming default, that is what will be assumed as your normal rates. That is what will be assumed as your normal rates. This is more of an administrative thing, not so important from exam, but it's a good to know chapter. It's a good to know chapter. This is what a default tax regime looks like. Yes, now I don't want to do sums and all around this because yeah, it's fairly the same thing which you have done in November attempt. Just be careful that in exam, if they use the word do compute the tax liability full stop, in that case you have to do both the regimes and tell which regime to opt for. In case they say compute the tax as per the options which is most beneficial to the person, compute to both the regimes and give back the answer. If they come and say compute tax under default regime, only 115 BSc. If they say compute tax as per alternate tax regime, then normal rates. If they say compute tax assuming that the person has opted out of default regime, again you're going to Finance Acts. But this May 2024, be extremely careful that if they just use the word compute tax or compute tax under both regimes or compute tax in the manner most beneficial or suggest which tax should be paid, all those things you have to check for both regimes. There is ample level of questions which are there in the syllabus right now, study material, my solutions guide, my MCQ guide, whatever it is. Feel free to go through those questions, see every requirement of the question, and when you don't see a requirement clearly stating as to what regime they're opting for, you will see that the answer has given both the regimes. Yes, I want to leave it here because I want you to practice this once again on your own. I have given you the background of this regime. I want you to solve questions relating to this and feel confident, because no matter what you try, current year default regime and alternate regime is definitely going to be tested. No doubts about it. For those people of my friends who are before November 2023 and before, you know what the new regime looks like. You are following the same thing, just that you have to critically understand these amendments. Beyond that, what you learned from the old material will remain good as it is. So please follow that also and then make these changes. Or like I said in the first of the lectures, it is better to buy a new book and work from that, because that would be the most safest option rather than scribbling around in the book, right? This is the end of your amendment lectures for CA Inter. Anyone who has watched these lectures, please feel confident enough to that extent that whether you have done your exams for May 23 or November 23, and if you have understood the concepts properly, these amendments alone will suffice for your May 24 exams. Don't worry beyond this. You can take this as a confidence measure and go forward and attempt the exam. Feel free to test yourself with the RTPs. I have already done a discussion lecture on the RTP as well. Please feel free to check out those after you have solved the answers. Wait for one more month. March, you will see ICA releasing MTPs. Again, solve that MTP once again and see where you stand. April, they will release a second MTP. Solve it once again and see where you stand. But please keep practicing on yourself, because a change of the syllabus is a very good opportunity for you to crack it in the first go, right? Please take this as a very good opportunity and see to it that you complete your exams in this attempt and don't wait for any further attempts. Yes, that's it from my side on the amendment lectures. I will see you all very soon on April 7th with the revision or marathon is what we call in CA Inter level. Yes, signing off people. Take care.